Cholamandalam Investment is on our radar right now. Company reported a good set of earnings for Q3 with a strong AUM growth and significant improvement in the asset quality, which is now the best in 3 years. Arul Selvan, who is the president and CFO of Cholamandalam Investment and Finance, joins us now to talk about that. Mr. Selvan, good morning and always great speaking to you. Your company has reported consistently stable numbers over the last many quarters, and this quarter as well, asset quality has improved. So can you just start by taking us through that? What is the outlook in terms of the asset quality going forward? Are you seeing signs of stress anywhere at all, or do you think that this kind of trajectory is something that can continue?
Yeah, our asset quality will improve in the coming quarter and even in the coming year. As in the normal way that happened pre-COVID, in Q1 of FY25, you may see some little bit of a, either it is staying at where it is or it may even deteriorate a bit, but because Q1 is always a bad quarter. But post that, we will again move forward in reducing our NPA numbers. And we see headroom to do this even in the coming year. So you will see improvements in Q4 and in FY25 in both in the NPA numbers and as well as in the NCL numbers. And that's what we are confident about as we move forward.
Okay. So when you say further improvement in asset quality, what are you targeting? You're already sub 4% right now. Any internal target that you have by the end of FY25, what would the gross NPA percentage be?
I don't want to give any forward-looking statements. Yes, we should see a considerable drop in Q4. But as I said earlier, Q1 we may lose that a bit. But then again, we will move forward to reduce this. The target would be to bring it closer to the 3.5% level over the next few quarters.
Mr. Selvan, hi, good morning. Prashant here. You had said that in the unsecured personal loan segment, where the growth was being led by fintechs, etc., you will moderate that growth, you will recalibrate that growth. Can you tell us what's happened there, growth rates and asset quality for that segment?
See, the unsecured segment, we are doing it broadly into two categories. One, through our own team and partly through the fintech team. The fintech team, we have been moderating it. I earlier also articulated that we had, moved away from one or two fintechs with whom we had been associated with. But with the rest, we are moving forward, but in a very, controlled manner, because we don't want to also be seen that we are, going away from the directions given by the regulator. So to that extent, we would be, carefully watching it and then growing it. But there is potential to grow, and we will certainly capitalize that in a controlled manner.
All right. Hi, Mr. Selvan. Good morning. Good to see you in. You had indicated that the cost of funds will go up a little bit because of the new RBI norms by around 15 to around 20 basis points approximately. So for Q4, how much will the cost of funds go up in comparison to Q3? And what does that mean in terms of NIMs? Because NIMs were stable in the past quarter. Please go ahead.
Sorry, the cost of an increase, which was expected to happen, which I spoke about earlier, I think most of it has come through. And that's where you would see certain amount of cost of an increase this quarter. But that had been offset to a large extent also by yield improvements, which had happened in the case of vehicle finance, which was our, portfolio which was under the fixed rate, and progressively it is changing color with a higher yield coming into play. So you will see that happening in the coming quarters also. In my opinion, we are at the cusp of the cost of funds, peak. Unless something new comes up by way of the regulatory interventions or some global, incidences, I don't see cost of funds going up from here. I am also not subscribing to a very fast rate cut. So I would say rather we would be on a sort of a plateau at the cost of funds level as we move forward into the next financial year.
So the NIMs will stay stable, what we have seen in the past quarter?
NIMs will stay stable, and it will also marginally improve as more of the vehicle finance book gets into a higher yield.
Got it. All right. So give us a rough mix then in terms of, what is the AUM growth guidance first? What do you end FY24 with, when FY25? And new business, there was some mild degrowth in the past quarter. And as a percentage as well of the total mix, it came down a little bit. where do you see that number stabilizing, AUM growth, and also the part that new business has to play?
See, I still stick to what I said earlier, that the full financial year FY24, our growth would be in the range of around 30 to 32%. And as you would have seen, it has moderated from the 47% levels to 36% levels as we close this quarter. But this is primarily because the base in the previous year has been higher in the third and fourth quarter, and that is what you will see come into play to bring down the overall growth. So you'll see this in the 30 to 32% growth for the current year. And next year, right now, I would rather be conservative in saying that it should be in the range of around 20% plus. I wouldn't want to put anything beyond that right now.
Okay. Can you give us some...
Yeah, go ahead, sir.
Sorry,
new business.
Sorry, you asked about the new businesses. So I wanted to cover a bit on that. We stick to the old proportion that we discussed again. Over the next 2 years, vehicle finance should be in the 50% range, and the mortgage businesses in the 35% range, and the new businesses in the 15% range. I think of which the unsecured should not be crossing the 10% level.
Okay. I just wanted a quick qualitative view on what's happening with the rural market. Are you seeing any signs of improvement? Because, you know, some of the vehicle financing spaces, like say for tractors, for example, right, have been under a lot of pressure. So what are you seeing overall in rural?
Yeah, in certain geographies, tractors are under pressure. So we are also slowing down in those geographies. But I think overall rural, there is still a large amount of, earning potential that is yet to be realized. And elections around the corner would bring that into the forefront, and you will see a lot more vehicle hiring as well as, money in the hands of the people to spend, which consumption increases the requirement for vehicles, especially the category of vehicles we cater to, which ply in the rural. So we see good traction out there with regard to our vehicle, population and our borrowers earning better in the coming quarters.
All right, we'll let you go on that note. Thanks a lot for joining in. That's Chola Investment. Asset quality has improved, and they expect some seasonal woes in Q1, but otherwise things are looking fine.